Welcome to the CT Now special, and today is that very special day when a household name became a script, and what a grand debut on the bourses they've had. To celebrate this moment, I have with me the three co-founders, Abhiraj Behel, the CEO that is, the COO, also Varun Khetan joining in, and Raghav Chandra, the CPTO, all co-founders of what we know today as Urban Company. And Abhiraj, if I could start off with you, what a bumper listing you've had. How does it feel?
Thank you, Aisha, for having us. It definitely feels, it's still settling in. Feels surreal, feels very joyous. But at the same time, we recognize that, this kind of reception that we've got and the love that we've got through this process and today is more a reflection of the faith people have in the company in the future. It's not a function of who we are today. It's a promise of the future, and the onus will be on us to deliver on that promise. We're a relatively small company in the scheme of things, and that's not lost on us. And whatever we see today, we take it with complete humility, and we see it as a responsibility for the future.
Oh, absolutely. And Varun, are you rehearsed enough now to answer questions on margins, profitability, etc.? But I really did want to understand that because, now the market is going to view Urban Company from a very, very different lens. What do you foresee in terms of both your margins and profitability going forward?
We look at our business, Aisha, in 4 different segments. There is our India core services business, which has all the home and beauty categories. That business turned solidly profitable in FY25, and it's the most mature part of our business. In the quarters and years to come, we want to continue to invest in growing that business, at the same time demonstrate improving margins in the India core services business. There are 3 other business lines that we called out in our RHP. There is our international services business, native line of products, and the InstaHealth service. All of these 3 are at this point in investment mode. They are newer businesses at different stages of maturity. We want to continue to invest behind growing these businesses and also improve their margin profile in the times to come. Overall, the goal is to think long-term and continue to build a enterprise that will be only valued on its profits. The more short-term will depend on the stage at which every business line is in, and we'll continue to disclose more details in the times to come.
Sure. Raghav, if I could get you in on the discussion, how does Urban Company differentiate itself from a traditional offline player in the very fragmented home services market now that you're a listed entity?
Yeah, I think we got into this space when we realized it's very fragmented, has very poor quality standards, and requires organization. And that's what we've kind of over the years built. We take pride in having invested in various parts of the supply chain, starting from training our supply well to innovating on all the products and tooling which get used on the job. We work very hard to have the right quality metrics, assist the partners on the job. And all of this is basically to make sure that the jobs are getting done with very, very high quality. And what this does in return is enable partners to earn a lot more through their, as they kind of go around delivering jobs for the month. So this is kind of how we've organized our marketplace and what we believe we do differently from the offline, unorganized world.
Right. But Abhiraj, let's look 5 years hence. How is it that you at Urban Company plan to now deepen penetration in existing Indian cities before perhaps expanding into newer geographies?
Aisha, I think we have a very simple framework to look at the promise for the consumer, which is faster, cheaper, better. When we started our service marketplace, getting a service the next day at a predefined time was in itself an innovation. Over time, that moved to same day delivery, and now people want the service delivered within 30 to 45 or 60 minutes. So faster is definitely one of the key pillars on which we want to differentiate. Better is very important for us. One of the things that sometimes is overlooked is the amount of investment we put in into going deep into every service category, whether it's in the tooling, the consumables and products, the SOPs, the training, the supply chain. As an example, we would have done a mini PhD inside Urban Company on all types of stains possible in your home. What are the chemicals needed to remove those stains? In appliance care, we've launched our own proprietary diagnostic devices, which give a real-time second opinion over what the technician is saying. So we really go deep into every service. We don't feel shy of getting our hands dirty and trying to innovate. And that, in our view, unlocks the axis of better. Unless the service quality and the service experience is distinctly better from the offline, consumers won't switch. And the third is, of course, cheaper, which in some sense comes from scale, comes from deeper penetration in our micro markets and better utilization of our service professionals, which leads to higher earnings for them and better pricing for consumers. So faster, cheaper, better, those are our simple pillars. If we continue to execute on those, we believe we will continue to penetrate both in our existing cities and existing service categories, as well as newer cities and newer services.
Sure. But Abhiraj, the Indian industry itself, the TAM is about what, $60 billion as of FY25 and projected to grow about $100 billion by 2030. How much share can online players very realistically capture and how?
You're absolutely right, Aisha. I think in the last year, this market was about 5.5 lakh crores and expected to get to about 8.5, 9 lakh crores over the next 5 years. And a very small percentage is online today, less than 1%. And, if I put all of our companies together, including Urban Company and the several others who are in the space, the organized online plays is a minuscule today. It's always hard to predict where this could be. But if we look at other categories, and as an example, if we look at Amazon when it went public in the US back in the 90s, and less than 1% of retail was online. Over the next 20, 25 years, it was successfully able to take a sizable percentage of that market online. And we believe the same is possible in services, particularly given urbanization, particularly given nuclearization of families, online penetration improving, and also for service professionals, there is a real aspiration to no longer be in the informal economy, to be part of real India, go through training and certification, to earn a decent, respectful middle class life. They have that aspiration to be part of formal India. And I think both sides will propel this transition from unorganized to organized and offline to online.
Okay, that's the word coming in from the manager.